wonderful study course. And I am sure we will get such good sessions in coming study courses by this subcommittee. Also, this course will definitely help all of us in coming audit season. So without wasting much of time, now I request our Vikasa chairperson, C. Abhijit Modi sir, to introduce our today's speaker, Central Council member C. Vishal Doshi sir. Over to you, Abhijit sir.
Thank you, Sohil. It's really a proud privilege to introduce Vishal Doshi sir. Vishal sir is always just a phone away for Nasik branch. You just give a call and sir would be always ready to help you and always will provide a solution to us. So just I'll take few minutes to introduce Vishal sir, though Nasik branch entirely knows sir know about sir, and sir is always there for Nasik branch. Vishal sir is a Central Council member of ICI for the current year 22 for the current term 22-25. Sir leads the audit and assurance practice for the renowned firm KC Mehta and Company, Vadodara, and has more than 25 years of professional experience. Sir also possesses diploma in our DISA course and insurance and risk management. Sir took the assurance functions of listed companies, government companies, multinational companies, and large corporates. Sir also specializes in convergence from Ind GAAP to Ind AS, IFRS, and has successfully led some very prestigious Ind AS implementation and convergence projects in oil and gas, power, infrastructure, and manufacturing sectors. Sir is Vice Chairman of Auditing and Assurance Standards Board, BOS Academic Board, and Expert Advisory Committee of ICI, and member of various standing and non-standing committees of ICI for the year 2022-23. Sir has been a member of WRC for the term 2019-22, and sir has also been the Vice Chairman of WRC for the year 2020-21. Sir has been the Chairman of Baroda branch of WRC of ICI for the year 2005-6. As a Regional Council member, sir has been Chairman of Corporate and Allied Laws and Corporate Governance Committee, Branch Coordination Committee, Ind AS, Accounting Standard and IFRS Committee, Ethical Standard Boards Committee, and also Vice Chairman and member of several other committees. Sir has also been a member of Regional Audit Committee of WRC of ICI for the year 2019-20 and 21-22. Sir is also peer reviewer for Peer Review Board ICI. Sir has been a technical evaluator of financial statements for ICI, Awards for Excellence in Financial Reporting for Research Committee ICI, and member of Financial Reporting Review Group, Baroda, for Financial Reporting Review Board ICI. To his credit, sir has been awarded Rashtrapati Scout Award by Honorable Shri K.R. Narayanan, Honorable President of India. Presently, sir is appointed expert member on the Board of Studies in Accounting and Financial Management, Faculty of Commerce for the term 2020 to 2023 by the Maharaja Sayaji Rao University of Baroda. With this brief introduction, I request Vishal sir to take over the charge and enlighten us with the revised Schedule 3 and all the amendments that has been prescribed from this year onwards. Over to you, Vishal sir.
Thank you, Abhijit bhai. Very good evening, friends. Very good evening to the chairperson, Sohil. I'll call them by first name because they are all good friends of mine. Secretary Sanjeevan, Regional Council member Piyush. To a very good evening to all past chairmen, past Regional Council members, seniors, and all the members of Nashik branch and even other places who would have joined virtually. Because virtual mode, that has an advantage that people can log in from anywhere in the world. So friends, it is indeed a pleasure to be amongst Nashik branch and all my friends once again. And I would like to, because this is the first occasion that I am addressing them, I would like to compliment the whole managing committee of Nashik branch. I would say I'm very confident that they would achieve new heights in the next 3 years in their term going forward. Piyush also I know very well, even before he became a regional council member. And I can see the hard work that he's putting in at the regional council. My best wishes to Piyush also. And I am confident once again with the support of all the members of Nashik branch, Piyush should also be able to contribute a lot at the regional council level. Friends, my special thanks and compliments to Team Nashik and all those who came together to stitch this company law course. I would say 5-day course. That is, I understand it's a 5-day course, right, Sohil? Yeah. So So I very strongly believe that we have always been focusing on direct tax, indirect tax, and company law and audit are the areas where now there has been a lot of regulatory action, and that is why my special compliments to the Nashik team that they have come together to stitch this course. So it's not only just from an audit compliance point of view, but even from a company law compliance point of view, because when we are certifying the financials of any company, knowledge of company law is a necessity, and that is very regulated. And we have seen in the recent past also that the MCA has started issuing notices to various chartered accountants as well as company secretaries on non-compliance, or I would say professional I would say limitations with respect to the work that has been executed. The topic that has been given to me is Schedule 3. And I believe that in the current scenario, to be very honest, friends, presently I am in Delhi, not only for council work, but also for clients' balance sheet finalization. And honestly, we are struggling with the new requirements that have come up with respect to the Schedule 3 and also to the CARO 2020. And therefore, I feel that I would also be able to share some of the practical issues that we are facing presently, that maybe going forward all of you might or it might help all of you once when you start implementing the revised Schedule 3 or the amendments to the Schedule 3. So I'll just share my screen. Just a minute, friends. Right. So starting with the topic which has been given to me, it is overview of Schedule 3. But what I have done and the way forward would be that I have divided it into two parts. One is whatever are the recent amendments to the Schedule 3, and then whatever were the earlier provisions of Schedule 3 on some of the disclosure aspects, which I will be sharing my experience. So my first, I start with a disclaimer that whatever are the views that I would be reflecting today would be my personal views and not that of the council or any of the committees of the council or of the ICAI. So friends, first we'll be starting, like I said, with the recent amendments to Schedule 3, Division 1, 2, and 3. And I would once again, specially compliment the team Nashik that they have come out with this presentation, at least on the CARO and the Schedule 3 amendments at the right time. Friends, I would just like to mention that as you are aware that in Schedule 3, there are a lot of changes, I would say, that have been made. And some of the changes that have been made are such that I feel that it would be extremely difficult for us as chartered accountants, as auditors, to close the financial statements of the companies, be it private limited, be it closely held public limited, within the time frame if we do not start working on the amendments with immediate effect. So I would say that maybe at the Nashik branch, I would request the committee two things based on my experience so far. One, please arrange similar webinars or maybe physical meetings for the clients of our fellow members or chartered accountants, because Schedule 3 requirement in most of the cases, they will have to pull out the data which our members, our friends would be able to audit. So rather than each one of us individually explaining the changes, the requirements to our clients, it's always better if the branch can do it on a larger platform, where I would request all the members to kindly invite their clients to that particular workshop or a webinar or a physical meeting, whatever that the branch arranges, so that it becomes easier for you to explain to the clients whatever are the requirements or the changes in the requirements. So it might be attended by the partner directors or the accountant or the CFO, whosoever, but that is one thing which is extremely important. And second thing, what I would suggest to the Nashik, again based on my experience, is that though today we are going to deal in detail, but this would not be, I would say this would just be the beginning of it. And I feel that there has to be regular interactive meetings, or maybe a help desk also, sort of, where members at the ICI, we have started a help desk on the auditing issues for the companies, which would be there. But at the branch level also, maybe you can have a panel who can deal with the issues or help and guide members on how to implement the amendments which are there to the Schedule 3, all the 3 divisions. So friends, like I said, Division 1, 2, and 3, there are 3 of them. So Division 1 typically applies to all the companies which are following the accounting standards. That is not the Ind AS, but the accounting standards 2006. So this would typically be all the private companies, small companies, and all that we audit. And I feel a majority of our friends present here today would be dealing with such audits, and therefore I will be spending more time on the Division 1 than the other 2 divisions. Division 2 are for those companies which are under Ind AS, so which we know that they are all the listed companies which are there under Division 2, or companies who are having net worth in excess of 250 crores. Or I would say even a third category, which are the holding subsidiaries, associates, or joint ventures of those companies which are following Ind AS. So, friends, there can be a situation also where last time I was there in Nashik and we were discussing that there can be a partnership firm also which would be required, or an LLP which would be required to follow Ind AS, just because more than 50% of the profit sharing is held by the listed company. So there would be situations where even a private company would be required to be under Ind AS, even if its net worth is not in excess of 250 crores. But so Division 2 typically deals with all the entities which are there under Ind AS. And Division 3 is for NBFCs, the non-banking financial companies, which are required to comply with the Ind AS requirements. So NBFCs which are not in excess of 250 crores net worth, or which are not under Ind AS, they have to follow Division 1, Schedule 3. So these are the inclusions. So what has to be presented: balance sheet, the statement of profit and loss. In Division 2, it is a SOCI, statement of changes in equity, P&L, cash flow notes, and the movement. So these are principally the financial statements. What is the financial statements comprise of under Division 1, 2, and 3. So just to give you a short background about these changes with respect to the Schedule 3. Actually the amendment to Schedule 3, there was a CARO 2020, which was notified, as the name suggests, it was notified in 2020 March. Thereafter, the COVID came in first wave, then in second wave, and finally we have this year CARO 2020 will be applied in March 22. But in the meanwhile, what happened that there were a lot of provisions under CARO 2020. See, let us understand the difference between Schedule 3 and CARO. A Schedule 3 typically is where the management, it is the responsibility of the management to prepare, because that talks about the presentation of the financial statements. And so it is the primary responsibility of the management. And as auditors, we express a true and fair view on that. That is what is Schedule 3. But when it comes to CARO, there is no role of the management except to provide details that the auditor might ask for. And the responsibility is that of the auditor to report under the CARO 2020 or any CARO or the audit report. So earlier, there were a lot of changes that had been made in CARO 2020, where the onus was solely on the auditor to report with respect to those details. Subsequent to that, there was Schedule 3 was amended last year in 2021, where a lot of changes that were, or a lot of reporting that was required under CARO 2020 was incorporated in Schedule 3 also. And therefore, in many places, you will find that Schedule 3 and CARO, there is an overlap. Second reason why it got incorporated in Schedule 3 is because many companies would not have CARO as applicability, because there are exemptions to OPC, to small companies, to private companies beyond a certain thresholds, whereas Schedule 3 would be applicable to all types of companies. And therefore, some of these amendments from CARO, they were brought into Schedule 3 so that all companies are able to report on them. Friends, from the institute side, the corporate and allied laws committees, they revised the guidance note on Schedule 3, Division 1, 2, and 3 in January 2022. So I would request you to please download those guidance notes whenever you are going through the changes with respect to Schedule 3. Similarly, on CARO also, the guidance note has been revised, but I would stick myself right now presently to the Schedule 3 requirements. So now what are the changes that have been made? So the first change, which is again with respect to Division 1, so I have marked which division the change has been made. So with respect to Division 1, mandatory rounding off is there, which means that till now, if we were taking the trial balance numbers and we were doing a VLOOKUP in the Excel and then certifying those financials, that would no longer be allowed because there is a mandatory rounding off requirement which is given over there. The second thing is that many times, unfortunately, I would say there are financial statements from Tally or the accounting software which are printed. They are just certified and audit report attached and filed. So even that would not be permitted now. In fact, that is absolutely wrong because there is a format given under Schedule 3 which everybody has to follow. And I would request everyone that please not to use those numbers which are just extracted from the accounting software, but to actually have the balance sheet and financials as per the Schedule 3. So now there is a mandatory rounding off. So if the total income is less than 100 crores, the rounding off is to the nearest hundreds, thousands, lakhs or millions. And if it is more than 100 crores, it would be rounded off to the nearest lakhs, millions or crores. So friends, my request, which I made at the inception, is that please start on the format, whatever are the changes with risk, because comparatives would have to be given. You will have to even give March 21 numbers with your March 22 financials, which have to be rounded off to the hundreds, thousands, lakhs or millions. So what might happen is that, let us say you are having a turnover, a company is having a turnover of around 200 lakhs, right? So whether you want to give as 200 lakhs or you want to give as 200,000, that you will have to decide based on whatever is the management requirement. So please ensure now there is no change as far as the ITR is concerned. That has still to be given in full numbers, right? So what I would suggest is that when in the Excel file, there is a formula that is there where you have a cell. You specify that it is to be rounded off to what number, then all the numbers that is linked to that cell, they would change accordingly. So if you write 1, so it will give full figures. If you write 100, it would be rounded off to hundreds. If you write thousands, it would be rounded off to the thousands. Why I'm saying is that it would otherwise be very difficult to have two sets of financials, one with full numbers for the ITR and one with the rounded off for the Companies Act. And therefore, if you have one set of financials where you do the formula you link and you do it, then it becomes much easier for you. So this is a mandatory requirement, and therefore you will have to now do the rounding off. When it comes to the other two divisions, so that rounding off requirement already was there. It was mentioned there, and therefore there is no such change as far as this notification is concerned. And there is a change. Till now, the threshold for rounding off was linked to turnover. Now it has been linked to total income, which means other income would also form part of the threshold when we are computing the 100 crore cutoff. So this is with respect to rounding off. The second change on the Division 1 is on the face of the balance sheet, where property, along with property, plant and equipment and intangible assets, these words have been added on the face of the balance sheet. So this is another change. Like I said, that you should start working on the March 22 financials from tomorrow itself. You have March 22 column blank, but as far as these formatting changes, the disclosure changes are concerned, the previous year rounding off, all those things you can keep ready so that there are no last minute rushing or last minute difficulties that you would face when finalizing these changes in Schedule 3. Second is on the face intangible, the words tangible assets is to be replaced by property, plant and equipment. So these are the two changes that are there on the face of the balance sheet on Division 1. As far as Division 2 is concerned, it is with respect to lease liabilities. Again, I would not spend much time because this is for Division 2, but just to give a synopsis of what this change or why this change is, I don't know how many of us remember the accounting with respect to finance lease. We would have studied that when we had appeared for our examination. But after that, there was hardly be any cases of finance lease, and most would have been operating lease, where we would charge it off to P&L, the lease rentals, and that was the only accounting we used to do. But under Ind AS, when these operating lease are there, there has to be, because there is an asset which your client, by paying rentals, is using, he has a right to use that asset. So that right to use asset has to be created as an asset against which there is a lease liability which would get created, and all the payments every year, there would be a present value done, and the payments would be adjusted against these lease liabilities, and that is what is under Ind AS 116. So the question till now was, because in the earlier Schedule 3, there was no Ind AS 116. The question was that where lease liabilities have to be disclosed. So now with this amendment, it is now made clear that lease liabilities will have to be disclosed on the face of the balance sheet. So earlier, non-current portion was shown under the borrowings, which were the lease obligations, and the current liabilities was shown under other financial liabilities. But now the current and non-current both are separate line items on the face of the balance sheet as far as Division 2 is concerned. Statement of changes in equity. Friends, just again, this is for Division 2 and Division 3, where it has been very clearly, you are aware that there is no provision like prior period errors. There is no accounting standard of prior period errors. So what it says under Ind AS, that if there is a prior period error which is immaterial, right, then you charge it off to P&L under the respective head in the current year. There is no need to show a prior period error like we show, like it is under the accounting standards. And if the prior period error, if it is material, and if it is relating to the prior periods, comparative period, then you restate the numbers of the comparative period. And if it is of an earlier period, then you restate the opening reserves of the earliest reporting period. So let us say March 22, you identify that there is some error of 2015 that had been committed. Then because it is of a period earlier than the comparative period, then as on 1/4/20, you change the reserves and you prepare the financials accordingly. So this was with respect to reserves, but then there was no provision under Schedule 3 that if there was an error with respect to the equity capital, then where would it be reflected? Right. So see, there are the financial instrument standard is applicable in case of Ind AS, and there are possibilities. So it would not just be the equity share capital, it would be the equity other than that also in case of compound financial instruments where you have to split between debt and equity portion. So if there is any error, how do you reflect that in the financial statement? So now in this amendment, they have said they have inserted a column of changes in equity share capital due to prior period errors. And along with that, there is a column added that restated balance after the prior period error, whatever is the restated balance at the beginning of the current period. So these two columns are added under the Division 2 as well as the Division 3. Promoters shareholding. This is an additional requirement applicable to all the three divisions, Division 1, 2, and 3. Friends, we do disclose shareholding in excess of 5%. That still continues. In fact, whatever are the amendments that I am going to discuss today, they are in addition to whatever are the provisions of Schedule 3, except for a deletion that has happened in one of the places with respect to the demonetization, the specified banknotes. Other than that, there are no deletions. So we'll come to that, but these are all in addition. So now, whosoever is the promoter, the shares held by the promoter, irrespective of the percentage of shareholding, if it might be 1%, 2%, that has to be disclosed in the financial statements under the revised Schedule 3 or the amendments to Schedule 3. So who is a promoter? So promoter is a person who has been named as a promoter in the prospectus or is identified by the company in the annual return that it files. So typically for a listed company, because under the SEBI LODR requirements, there has to be a regular disclosure of the promoters holding and whether there has been any change or pledge of shares by the promoters and all. So those persons are already identified as promoters as far as the listed companies is concerned. But for a private companies, those people who have the control over the affairs of the company directly or indirectly, whether as shareholder, director or otherwise. So this is defined in 269, section 2, subsection 69 of the Companies Act. which would mean that typically when we talk of the private companies where we all are auditing, the directors would typically be promoters, as well as a shareholder also, who might not be a director, but has control over the affairs of the company, would also be a promoter. So in case, so whatever be their shareholding, whether it is in excess of 5% or less than 5%, the name, the number of shares, and also if there are any changes in the shareholding during the year, as far as promoters is concerned, that has to be disclosed under the capital clause. And third is that there are professionals who advise the company, and on their advice, directions or instructions, the board of directors of the company is accustomed to act. So let us say somebody of you over here would be providing service to the companies, where you are preparing monthly MIS, you are having quarterly details or workings and sharing with them, you are also advising them, and on your directions and instructions, the board of directors is normally, it acts. So whatever you say, it may not be 100% that it acts, but normally, they are accustomed to act on your advice. Then you would also become a promoter. But the only exception is that if you are advising in a professional capacity. So, I would say, how do you say professional capacity? I would say one of the benchmarking would be that whether you are raising an invoice for these services that you are providing to the company. So if yes, then it means that you are acting in the professional capacity. You are advising the board and everybody in a professional capacity, and therefore you would not be termed as a promoter. Otherwise, you would be termed as a promoter. And if you are holding any shares, let us say 1%, 2%, or whatever be it, that has to be disclosed with your name as a promoter. This is a disclosure change, or I would say more of a reclassification. Earlier, current maturities of long-term debt. So typically this would be in case of the term loans, where there would have been a long-term debt. So current maturities means those installments which are falling due in the next 12 months from the balance sheet date. So current maturities of long-term debt, till now, Schedule 3 required it to be reflected under other current liabilities under the main heading of current liabilities. So current liabilities, because it was to be paid in the next 12 months, and then under that other current liabilities. Now it has to be reflected under short-term borrowings under the group or the main head of current liabilities. So the main head current liabilities remains the same, but now instead of other current liabilities, it would be reflected under short-term borrowings. Now, where I see that for the clients, it can be a challenge that till now they have shown this under other current liabilities. For the purpose of calculating debt equity ratio or any other debt service coverage ratio or whatever ratio, if this amount which was shown under other current liabilities, which was factually a borrowing to be paid in the next 12 months, but reflected under other current liabilities, if this was not, I would say, taken into consideration as borrowing, and now because this amount would appear as a short-term borrowing, there would definitely be an impact as far as the ratios are concerned. So earlier, so what it would do is typically it would have a negative impact on the debt equity ratios and other ratios, because short-term borrowings would shoot up, and especially even in the previous year, because you will have to restate the previous year in comparison to the current year. And so in the previous year, if any number has been given anywhere, then to that extent, the debt equity ratio would have a negative impact. And so the clients have to look into these things, that if it has a negative impact, then going forward, whether it would impact that their credit rating or any such thing, and increase the cost of debt or whatever it might be. But I believe that this is now a correct reflection of the current maturities of the long-term debt, those which are falling due in the next 12 months. Trade payables aging schedule. So friends, till now, we always had a receivables aging schedule, more than 6 months, less than 6 months. But now on the payable side, we have to give is a trade payable aging schedule for all the outstanding amounts from the due date of payment. So you can see there are 4 buckets that have been given: less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So these are the 4 buckets where these are the overdue. So from the due date of payment, if that amount has been not paid for, let us say, 1 month, then it would come under the less than 1 year category. So that way you will have to do the bifurcation. So till now we used to give the MSME and the non-MSME, so that continues. But in addition to that, there is another category with respect to disputed. So you will have to mention that it is disputed MSME or other than disputed MSME, and similarly non-MSME, whether it is disputed or non-disputed. So the guidance note, friends, it mentions that the total column should match with the total of the trade payables that you are showing in the financial statements. But for that, it says that you might need to add 2 more columns. One is you will need to add a column of not due. So let us say there is a supply that has been received by your client on 25th of March, for which there is a credit period of 30 days, which means that it would be payable on, let us say, around 25th of April. So as on 31st of March, that amount is not yet due. So it would not fall in any of these 4 buckets, but you will have to add 1 more column of not due so that the amounts match. In addition to that, the guidance note says that there would be certain amounts, there may be certain amounts which are unbilled, but booked as a provision under the trade payable. So typically, those of clients who are using ERPs, what happens is when the material is received or the service is received, there is a GRIR or a SRIR sort of an account that gets created, which gets credited, and the service cost, the cost gets debited either in inventory or the service, and there is a liability that gets created. But since the invoice has not been received from the vendor, it gets parked in the GRIR or the SRIR account, and which, when the grouping is done, it gets merged with trade payables, but invoice is not received. So this is like an unbilled amount. So for that also, the guidance note says that you may add a column of the unbilled amount. So you will then have total 6 columns, the 4 buckets that have presently been given in the notification as the format. And in addition to that, you will have 2 buckets, one for not due and one for unbilled or the provision that we were saying. So now what is disputed? So the guidance note says that disputed, not necessarily it means that there has to be a legal case. So not necessary that there has to be a legal case in a court for it to be disputed. In my view, dispute can be for many reasons. Let us say there is a difference in the quality of the material that you have received or the services that have been provided to your client. Second is there might be on the quantity side with respect to the material that the client would have ordered 10 pieces and the delivery would have had of 8 pieces. So there might be some dispute with respect to that. There can be a dispute on the delivery schedule also, that maybe the client would have ordered something on 5th of March, which was delivered on 25th of March. And so your client might have raised a dispute with respect to the amount payable with respect to such an invoice. So dispute can be for many reasons, but very important, it must be documented. I would say as a part of your audit procedure, you must take some email correspondence, some letter that would have been sent, or as well as acknowledged by the vendor that there is a dispute that has been raised by the client. Just because the client says that it is disputed and without any audit evidence, you agree on the disputed, I would have my reservations on that. Friends, what would happen is, see, because now all these numbers would be in public domain, even with the lenders, the bankers and everybody. Now just imagine a situation that you have a total outstanding of 25 crores in case of the payables. Total trade payables is 25 crores. Now, out of that 25 crores, there is an amount, let us say, of 2 crores, which is under undisputed and in the bucket of 2 to 3 years. Now, as an auditor, would you not ask a question that why for such a large amount is there in the undisputed column, and that also for a period of 2 to 3 years? How come the vendor is not asking you that too for the payment? Or how come you, as a receiver of the goods or services, you are not making the payment for a period of 2 to 3 years, right? So all these would now come under the question, even from the maybe regulators as well as the bankers and everybody. So I feel that as auditors, first we should ask all these questions and ensure proper documentation, because you never know, you might also be asked questions by somebody who have seen that you have certified the financials, which has an undisputed amount of 2 crores out of a total outstanding of 25 crores. Similarly, the other way also, friends, let us say you have a disputed amount of 2 crores in a 2 to 3 year bracket. Then as an auditor, I would say you still need to question that such a large amount is under dispute. What is the dispute? What is the liability that has been booked? I think all these things you will need to document. And so whenever you are auditing, I would request friends, do not just audit based on the numbers, but ask certain questions, that why a particular amount is in a particular bracket, or whether it is disputed, undisputed, whatever it might be. Just do a thorough audit and verification of those numbers. Coming to property, plant, equipment. Friends, first thing that I would like to draw your attention is that the name, we earlier had AS10. So these changes are to division 1, 2, 3 all, but I would, like I said, focus more on division 1. So under division 1, what would happen is, so this AS10 has been revised way back in 2016, and the name of the standard has been changed from fixed assets to property, plant and equipment. You could see even from the earlier schedule 3, the face of the balance sheet also, where they have used the word property, plant and equipment. So my request to you is that please go through the financial statements which you are auditing, which you are certifying. And in case the word fixed assets has been used anywhere, kindly replace it with property, plant, equipment. So that is my first suggestion. My second suggestion is that when AS10 was amended in 2016, AS6, which was depreciation accounting, was deleted. It has been now no longer in existence since 2016, because the depreciation related provisions are now inbuilt in AS10. So in case you have in the financial statements which you are auditing, if you are making any reference to AS6, again, that is technically incorrect. I would request you to kindly revisit it, and based on whatever you are reporting, kindly change that AS6 to AS10. And instead of depreciation accounting, it should be property, plant, equipment. These are the two suggestions that I have. Third, I would like you to just follow what I'm saying, and then maybe we can just have a raise of hands in the Zoom to understand that whether whatever I'm able to correctly interpret whatever others are. So now you have this schedule of property, plant, equipment, right? So what we are showing is in the first column, there you have the particulars, where I think there is a comment that has been received to mute others. So if the organizers can just do the needful.
Mr. Anil Khetamal to mute him, please. Mr. Anil, can you mute yourself? Sir, I will check with the admin.
Yeah, sure, Piyush bhai, no problem. So friends, just follow me what I'm saying with respect to the note on the fixed assets or property, plant, equipment that we are giving presently. So you have the first column, which is particulars. Then you have the gross block, where we say opening balance, additions during the year, adjustments, deletions, and then we have the closing balance of gross block. Then we have the depreciation block or the depreciation schedule details, where we have the opening balance, accumulated depreciation opening. Then we have depreciation during the year. Then we have is the reversals or adjustments. Then we have the closing depreciation. So these are the 4 columns of depreciation. Then we have 2 columns with respect to net block, current year, previous year, and 1 line right at the bottom of previous year for opening, adjustments and everything. For each column we have total of the previous year. So how many of us agree that this is how we show? If you can just raise your hands or say yes in the chat box, that this is how the disclosures that we are doing. Anybody? Yeah, so we have started receiving chat. How many of us are present in this way? Yeah, so I presume based on the raise of hands and the chat that we are receiving, almost everybody is doing in the same way. So friends, now whatever we have said, yes, whatever I have displayed is technically incorrect. I know you will be surprised, but technically it is incorrect, because if you read what the first line in the slide says, a reconciliation of the gross and net carrying amounts of each class of assets at the beginning and end of the reporting period, showing additions, disposals, which means that if you have a first line of property, plant, equipment, or sorry, plant and machinery, for where you are showing all the columns, 8 columns, then you have to give a second line which is corresponding for the previous year, all the 8 columns, right? Then let us say you have furniture fixture, so you have current year everything, you have previous year all the numbers. So right now whatever we are showing previous year total and net block total, that is not technically correct. We have to give for each of the line items corresponding numbers of the additions, disposals, acquisition, depreciation, everything corresponding year on year for each class of assets. So you have 2 options. One is, like I mentioned, that for each line item you give current year, previous year, current year, previous year, current year, previous year. That is one option. Second option is that you have a table for current year, and then you have a whole table, similar table for the previous year numbers. So you have 2 tables. In case anybody is not able to get me, I would just request, please download the published annual report of any listed company, a good listed company, I would say, and go through the schedule, how they are showing the property, plant, equipment, and that is what we have to follow, right? So I gave 3 inputs on this. One is with respect to mentioning of AS 10, second is with respect to AS 6, and third is with respect to presentation. So how many of you will make the changes this year in the financials that you would be certifying? I hope everybody would be making those changes now in the March 22 numbers that you will be certifying. Yeah. So, so these are the disclosure requirements with respect to the financial statements, or I would say with respect to property, plant, and equipment. So you have to give, like I said, all the details of additions, disposals, acquisition through business combination, which is like a merger. If there is a revaluation, then you have to give those disclosures by way of a separate column. AS 11, if there is a change in the forex rate or any borrowing cost capitalized on all those additions with respect to the property, plant, equipment, that you have to show separately, and the related depreciation and impairment losses and reversals shall be disclosed separately. Similar movement has to be shown with respect to the intangible assets. So like we were showing what we discussed for the tangible assets, the same thing has to be disclosed for the intangible assets, the additions, disposals, acquisition through business combination, revaluation, amortization, and all those things, right? So that is a similar thing applicable to all the 3 divisions. Another reclassification that has been given earlier, so this is on the asset side, security deposit that the company would have given and is showing as a receivable. So earlier it was shown under long-term loans and advances, the security deposits. Now it has to be shown under other non-current assets, because it typically security deposits do not match the terminology loans and advances. It is neither a loan nor an advance, nor an advance in the nature of loan. So it has to be under other non-current assets. So this is just a presentation change that is there for division 1. And for division 2, especially for the Ind AS companies, the security deposits was shown as earlier under loans, which would now be classified under other financial assets.
September closing balance confirmation.
Trade payables, sorry, trade receivables aging schedule. So we have seen the trade payables aging schedule, which we discussed. Now we are having the trade receivables aging schedule. So here, if you see, we have 5 columns, 5 buckets. Earlier, we had 4 buckets, but because we always used to show 6 months, so there is an additional bucket of less than 6 months, 6 months to 1 year, 1 to 2, 2 to 3, and more than 3. We earlier used to also have this disclosure. Typically, like we say that if I look at a trade receivables, we used to say unsecured considered good, secured considered good, unsecured considered doubtful, secured considered doubtful, and then we had a provision for doubtful debt. So this was how it was all being reflected till now. That continues. In addition to that, now we have to give this aging. So the undisputed, again in trade receivables, there has to be a classification between disputed and undisputed. So now we have undisputed trade receivables considered good, having significant increase in credit risk. So having significant increase in credit risk, friends, would typically mean a situation where a provision for doubtful debt is not done, but there is an increase with respect to the certainty of the realization of that amount. So maybe what can happen is that your client is pursuing the matter for collection, but then he is doubtful that 70% chance hai aane ka, 100% nahi hai. Then you might say that there is a significant increase in credit risk. So again, taking our discussion forward, what we have discussed under trade payables, under trade receivables also, see what would happen is typically, let us say, somebody has, your client has put undisputed trade receivables considered good in the bracket of 2 to 3 years. I think as an auditor, we need to question that 2 to 3 years, if it is undisputed, why is it not received? So either it is disputed or maybe there is an increase in credit risk. Then we might need to reclassify or recheck on the rows where that amount is getting reflected. So you will have to do a diligence check also with respect to how the numbers are getting plotted in which column and against which row. And in that matrix, you will have to assess that whether it gives a correct picture. And if there is any additional audit documentation which you need to keep on record or which you need to verify, you will need to do that. Similar over here also, the same, the guidance note says about adding 2 more columns. One is the column with respect to not due, and second is the column with respect to unbilled revenue. So I'll not have a detailed discussion on that. We have already discussed as far as trade payables is concerned. So on receivables also, the 2 additional columns are required to be given. If due date is not specified, so this would be applicable for trade receivables as well as trade payables, then the guidance note says that the disclosure you need to, so if due date is not mentioned, what to do? Then the transaction date will become the due date. And what is the transaction date? That is the date on which the clients, the entity's right to consideration is recognized. So typically when you're booking the sales and the trade receivables, because now the client has a right to receive that money. And also as per the applicable accounting standard, you can recognize that receivable, that becomes the transaction date. And that date, because there is no credit period or due date is not mentioned, that transaction date itself becomes the due date. And everything beyond that, if it is not yet received, it would become overdue and would be classified in the respective buckets. So similar thing would be there for the trade payables also, that if due date is not mentioned, whatever is the transaction date, the liability, the payable would trigger from that day itself. Dispute, I've already said that it does not only mean a legal dispute or something in a court of law, it can be much more than that. So friends, like I mentioned earlier, that whatever we have given presently as a classification, and now we are giving one more table under the aging schedule, we have to ensure that even these 2 tables, they match amongst themselves. So whatever is less than 6 months in this table has to be in the earlier table that we were reflecting in 6 months. Those 2 amounts should match. The disputed, undisputed, provision, credit impaired. So the totals of the disputed plus undisputed should match with the standalone numbers that have been reflected in the earlier table. So, these reconciliations also, I would request you to please do it before you sign off. Some other changes which are there made to the balance sheet. So first is where the company has not used the borrowings from banks or financial institutions. Then I have some questions in the chat, which I will take later on in the end. So where the company has not used the borrowings from banks and financial institutions for the specific purpose for which it was taken at the balance sheet date, then so this would be typically, in my view, term loans because cash credits normally the company uses for the purpose it was there, and it would only use you would not take a cash credit and invest in a fixed deposit or anything. So even fixed deposit, if it is given as a bank guarantee or a tender, it is for business purposes. But it would not be that you have borrowed money and investor or client has invested in shares and mutual funds. Then there would be a mismatch, and which would need a reporting. In case of term loans, in most of the cases, the payments are made to the vendors directly by the bank. But in case that is not happening and the money is given to the client of yours, and as on 31st of March, that money has not been utilized by the client for the purpose for which it was granted, then this has to be disclosed in Schedule 3. So it is as at the balance sheet date. Now let us say subsequent to the balance sheet date, if the client has ultimately utilized it for the purposes for which it was borrowing was taken, but that does not mean that as on balance sheet date, the client would not report in the financial statements. If the client want, they can add a paragraph to the disclosure that subsequent to the balance sheet date, it has been utilized. But because the reporting requirement is as at the balance sheet date, this has to be seen as at the balance sheet date and not just after the balance sheet date. Second is with respect to the demonetization time, this reporting had come. SBNs now no longer required, no longer relevant, so that has been deleted. The third is with respect to specifically with respect to Division 1, where in the opinion of the board, any of the assets other than the property, plant, equipment and non-current assets. So typically a current asset, current assets, loans and advances, whether they have a value on realization which is equal to the what has been reflected in the balance sheet or in the financial statements. That is the board's opinion that they would be able to recover. And this is with respect to the current assets, or typically assets other than property, plant, equipment, intangible assets and non-current investment. So my request, friends, one, if this note is not being disclosed, if in the opinion of the board, if that is not being disclosed, kindly add that to the set of financials which you are auditing, you are certifying. If it is there in a similar language, then please add the word intangible assets, because that is what is the amendment, where you have to mention of all the current assets and current investments, and non-current has to be left out, and intangible is a non-current. So this is the change on that. Valuation by registered valuer. So in case of Division 1, if there is a revaluation of property, plant and equipment that has been done, an upward revaluation or even a downward, then the company has to report in the Schedule 3 whether the valuation was done by a registered valuer as defined under the company's registered valuers and valuation rules. So only those valuers are entitled or eligible to revalue the property, plant, equipment in case of Division 1. And in case of the Ind AS Division 2 and Division 3, there are other areas also where a valuation report is required with respect to fair value of investment property. So in that, investment property might be carried at cost, but there is a requirement to disclose in the financial statements the market value of the investment property and property, plant, equipment and intangible assets. So in case there is a revaluation or a fair value disclosure for any of these three categories, then it has to be done by a valuer who is a valuer defined as per the valuation rules. So this is the disclosure. Title of immovable properties. So where any immovable property, that is land or building or both, in the financial statements, it can be disclosed anywhere, whether under property, plant, equipment, whether under investment property, or whether under non-current asset held for sale, or anywhere else also. This reporting will still be required. So it's not necessary that PP schedule mein hi diya hai to hi aayega. Aisa nahi, kahin pe bhi aapke hai land and building. So what are the disclosures? So in case of a leased asset, right? If the client has acquired any asset or is paying lease, if the lease deed has been executed in favor of the lessee, right? So if there is a lease deed between the company and the lessor, then this would not be applicable. Means it is as good as the title is in the name of the company. But in case the lease deed is not there, then also this reporting is required. So, typically because your leasehold assets, in case of Division 1, you would not have like you have in case of Division 2 and 3. But lease, अगर lease expense हो रहा है, rent expense हो रहा है, तो आपको देखना है ये agreement है company के नाम का and it is valid, continuing. In such case, it is exempted. Otherwise, that would also come here. So what has to be disclosed? The gross carrying value, the title deeds held in the name of, किसके नाम पे title deed है, land building का जो भी है, टाइटल डीड होल्डर वो प्रमोटर है, डायरेक्टर है, या प्रमोटर डायरेक्टर का रिलेटिव है, या उसका एम्प्लॉई है, किस डेट से उनके नाम से प्रॉपर्टी है, एंड फाइनली रीजन फॉर नॉट बीइंग हेल्ड इन द नेम ऑफ द कंपनी, और अगर डिस्प्यूट है तो डिस्प्यूट की डिटेल्स भी आप दीजिए. So many times, what can happen possibly is in case of private companies that originally let us an office space or some land or building is purchased by the director in his or her name. Then it is sold to the company. The money moves from the company to the director, and just to save on the stamp duty, the title is not changed because वो family owned company है. तो डायरेक्टर बोलता है कि भाई स्टैम्प ड्यूटी नहीं पे करना है, तो इसको अभी टाइटल चेंज नहीं करते हैं, पैसा तो बाकी सब हो गया है, एमओयू किया है या जो भी है. So in such a case, it would get reported because title deed is not held in the name of the company, and therefore all such cases would be reported over here. The next disclosure requirement is on the loans and advances. Division 1, Division 2, Division 3 सबको applicable है. So where the amount or loan or advance in the nature of loan is outstanding, either from the promoter or the director or a key management personnel or a related party. ये चार में से किसी को भी दिया है loan. See, loan is very fine. It's very easy to identify. The reporting requirement additionally is advance in the nature of loan. So what happens is that, let us say, I'll give an example. कि related party जो है company है, उसकी एक related party है which is a partnership firm where we have common directors, director is a partner and all this stuff. It meets the criteria of related parties. That related party sells goods to this company. Now this company gives advance against those goods. So as an auditor, you will need to examine that whether that advance given was at arm's length, is it reasonable, or that advance actually was a loan, but it has been given in the nature of advance. So let us say if it is at arm's length, उन्होंने 2 crore का purchase order दिया है. So your client, the company, has given a purchase order of 2 crores, against which it has given an advance of 1.5 crores, or maybe 2 crores पूरा advance दे दिया. So now whether that is as per the normal practice, whether that 2 crores अगर किसी third party को भी दिया होता, तो client ने उसको दिया होता at that advance 1.5 crores to 2 crores. So you will have to examine that, and if not, that means it is actually that 1.5 crores or 2 crores is a loan which has been given in the nature of advance. The second is with respect to the time, the duration. Let us say that 2 crore purchase is over the full year, और अभी से 1.5 crore advance दे दिया है, whereas the supply was to be staggered over the next 12 months. In that case also you will have to examine कि अगर 1.5 crore upfront दिया है, so whether it is correct or actually it is loan, जो advance के ऐसे दिया है, but actually it is loan in that nature. So all these you will have to identify. It would depend on the facts and circumstances of each case, and relationship आपको देखना है on the date of loan, not on the balance sheet date. So let us say a director को loan दिया है, let us say in the month of September or October, 31st March को that person is no longer a director, but on the date of loan he was a director. Then also this would get reported over here because the relationship has to be considered on the date of the loan. So these are the reporting requirements with respect to the lending. CWIP aging, capital work in progress. So this would be more so, especially in case of the manufacturing companies, जहाँ पे factory related there would be expansion going on or new factories that are being set up, जो 2-3 साल के project होते हैं, and there would be a CWIP, and or maybe in some cases अगर office भी under construction है, which is in the name of the company or interiors बन रहा है, so there is a possibility that there can be an aging of 1 year to 2 years, but chances are less. It's more so in case of factories and production capacities. So what are the disclosure requirements? So disclosure requirements are 2 categories: projects in progress and projects considered temporarily suspended. तो इसमें CWIP का जो है आपको buckets दिए हैं, 4 bucket, less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. From so asset wise detail नहीं देनी है कि भाई आपको factory A है, office B है, factory C है, expansion D है, ऐसा नहीं देना. You have to give total projects in progress and projects temporarily suspended. It will also be applicable to investment property under development. मतलब rentals के लिए कोई property बना रहे हैं या ऐसा कुछ है which is investment property, then that would also get classified under this CWIP. And based on the invoices, based on the project timelines, this CWIP will have to get categorized into these buckets. And another thing, total of this, it should match with the total of the CWIP in your financial statements, in your balance sheet. Right, so these totals should match और उसको आपको अलग-अलग buckets में इसको classify करना है. CWIP completion schedule. So this is more so in case of those projects where there are time overruns or there are cost overruns. So let us say कोई project था आपके client का जो as per their board minutes or as per their internal project workings and all, they had estimated that it would get over by 1st January 2022. बट 31 मार्च 22 तक वो प्रोजेक्ट कंप्लीट नहीं हुआ है और अभी और 1 साल चलेगा या 6 महीने चलेगा एज पर द मैनेजमेंट एस्टिमेट. देन दीज डिटेल्स हैव टू बी गिवन एंड दीज आर टू बी गिवन प्रोजेक्ट वाइज. अगर छोटे छोटे प्रोजेक्ट्स है जो डिले है देन यू कैन क्लब इनटू वन, बट फॉर ऑल मटेरियल आइटम्स यू विल हैव टू गिव प्रोजेक्ट वाइज डिटेल्स एंड ऑल्सो गिविंग डिटेल्स ऑफ वेदर दे आर टेम्पररीली सस्पेंडेड और दे आर इन प्रोग्रेस. एंड अभी टू बी कंप्लीटेड इन एस्टिमेटेड बेसिस पे वो कब कंप्लीट होंगे उसका आपको देना है कि 1 साल में होगा, 1 से 2 साल में होगा, कब होगा. एंड सिमिलर टेबल यू हैव टू गिव wherever there are cost overruns, that how much time it would take for those projects to be closed. So the guidance note says that although the notification prescribes only one table, but we should typically give 2 tables, one for time overruns and second is for cost overruns. So this is with respect to the CWIP completion schedule. Intangible assets under development. So जैसे tangible assets का दिया, property plant equipment का दिया, वैसे ही दोनों disclosure. So one is the aging and second is with respect to time overruns, cost overruns, completion schedule. So both of these disclosures have to be given for intangible assets also which are under development. Benami property. This is an additional disclosure. So this is required for those companies where any proceedings have been initiated or which are pending for holding any Benami property under the Benami Transactions Prohibition Act of 1988 and the rules made thereunder. तो क्या-क्या disclosure करना है? Disclosure करना है details of such property, year of acquisition, amount, beneficiary कौन है, उनका नाम, address, government identification number like a PAN, Aadhaar, CIN, whatever, और company के साथ क्या relationship है. With respect to books of account, ये जो बेनामी प्रॉपर्टी है जिसके अगेंस्ट देयर आर पेंडिंग प्रोसीडिंग्स और प्रोसीडिंग्स व्हिच हैव बीन इनिशिएटेड, तो प्रॉपर्टी बुक्स में है तो रेफरेंस टू द आइटम इन द बैलेंस शीट कहाँ पे डिस्क्लोज किया है, और अगर बुक्स में नहीं है तो बुक्स में क्यों नहीं है वो आपको फैक्स और क्लाइंट को फैक्स वो स्टेट करना है विद रिस्पेक्ट टू द बेनामी. एंड थर्ड कैटेगरी इज विद रिस्पेक्ट टू द प्रोसीडिंग्स, that where a company is acting as an abettor, whether the company is acting as an abettor or a transferor, तो कौन इनिशिएटिंग ऑफिसर है, शेयरकर्स नोटिस क्या है, क्या प्रोसीडिंग्स है, अटैचमेंट है, एडजुडिकेशन है, कन्फिस्केशन है, क्या स्टेटस है, कंपनी का व्यू क्या है, वो जीतेंगे हारेंगे या कोई ये प्रॉपर्टी बेनामी नहीं है, whatever. So all these disclosures will have to be made with respect to the benami property. Borrowings on security of current assets. So friends, this is a major change and where I feel that there would be a lot of challenges which a lot of us members would be facing while reporting on this clause. So though, like I said, it is a Schedule 3 reporting, company would have to report, but as an auditor, we will also have to do our audit procedures. So typically this is for borrowings where the security is current asset. So current asset we can say is like an inventory or trade receivables, fixed deposits, but fixed deposits के सामने normally OD होता है. We don't need to give any statement or return, so that would not be a big challenge if it is with respect to OD against FD. But where it is against trade receivables and inventories, then the reporting is that whether the quarterly returns or statement filed are in agreement with the books or not. So first of all, we will have to take the acknowledged copy of the quarterly returns of statement that has been filed. So acknowledged by the lending institution, bank है, NBFC है, जिससे भी borrowing लिया है, उसके पास से we will have to take the quarterly return or the statement duly acknowledged by them कि यही file किया है. That is the first thing. Second thing is that the books of account के साथ match करना है कि वो match होता है या नहीं. we need not audit those books when we are certifying this particular reporting or the disclosure. Which means that, let us say that आप जब मार्च के बाद में audit करते हैं, there are some changes which you are making which will be effective of the June inventory or June trade receivables. Then it is not necessary that you pass the rectification entries in June. As it is, that cannot be passed in June, because when we are doing an audit trail, it has to be, all the rectification entries have to be passed in March. But if you're doing anything in June, then those numbers would change, and then you should not report that it is not matching with the books of account, those quarterly statements. So whatever is there in the books, उसके साथ match हो रहा है या नहीं, वो आपको देखना है. So it need not be audited. But the challenge that I see here is that where the quarterly statement is there, then what would be, whether it has been entered in the books or not. See, as far as trade receivables is concerned, you can always do a quarterly period breakup and find out as at the quarter end what were the trade receivables that were there in the books and whether that matches with the statement that has been filed. But when it comes to inventories, there are so many of the companies, which do not take inventories or do not enter inventories in the books as at 30th June, September end, December end, and March end. March end to dalte hain at the time of closing, but these are, they don't do it. Even those in the ERP, they have those inventories, but they are not there. I would say they are not in the full value of, let us say, raw materials itna hai, packing materials itna hai. So that would be a challenge. So here I would request that we have to urge all our clients to tell them that whatever is the inventory valuation that they are doing, they should from now on enter it in the system each quarter end, so that you are able to verify that whether those return statements, whatever details are filed, they are agreement with the books of account. So the illustrative format has been given in the guidance note, and this is required, even on the basis of non-fund credit facility. So it's not only funded, but both funded and non-funded, and on the sanctioned amount, on the sanctioned borrowing. So even so, borrowings have been sanctioned, they might not have been utilized at the year end or during the period. So three things: one, funded, non-funded, whatever it is, this reporting would come. Second, it is on the sanctioned amount and not whether it is on utilized or not utilized. If it is sanctioned, you have to report on that. And the third thing is that as at year end, the balance might be zero, but it has been utilized during the year. Then also this reporting is required to be done, right? So these things we need to keep in mind. Willful defaulter, whether a company is declared willful defaulter by any bank or financial institution or any other lender, then we have to give details of the date of the declaration of willful defaulter and details of defaults, the amounts and the nature. So this is more where RBI has given powers to the banks and the financial institutions to disclose. I don't think हमारे कोई client होंगे जो willful defaulter category में आते होंगे, and therefore I can skip this. Relationship with stock of companies. Again, friends, this is extremely difficult right now to audit under the present situation. So what the guidance note says, so background में पहले दे देता हूँ. It is with respect to stock of companies, मतलब जो companies है ROC के register में से strike off हो गई है. If your client has any relationship, मतलब उनके साथ कोई भी transactions किया है, closing balance है, as a receivable, as a payable, कहीं पे भी deposits है, security deposit दिया है, लिया है, कुछ भी है. In fact, it goes a step ahead. अगर आपके क्लाइंट ने उसके शेयर्स में इन्वेस्ट किया है, सो कोई लिस्टेड कंपनी है जो स्टॉक ऑफ हो गई है और आपके क्लाइंट ने उसके शेयर्स में इन्वेस्ट किया है, वो डिटेल्स आएगी. Reverse would also be there, more so difficult in case of listed companies, that if a stock of company has invested in the securities of your client, then that also would have to be disclosed. Now, for which one option is where STK 7 is filed. So I'll say there are three options, right? One is STK 7, which is mentioned in the ICI guidance note. So STK 7, friends, is typically a return, a list of the company's stock of, which is filed by each registrar of companies with the MCA. So if you go to, I also went to the MCA site and I downloaded a few STK7. So it is ROC wise, that is one. Second, it is a PDF file and we have to convert it into Excel. And plus, so for a particular month, there would be 20 ROCs that would be filing. And then when you have to talk of a 12-month period, so 20 into 12 to 40 STK7s would be there, which you might need to download to find out whether there are any transactions with stock of companies or not. So that is one way of doing that. Second is that the company identification number which the clients provide or the client's team has, it can go into MCA and check the status of each of the company to find out whether it is struck off or not struck off. This is the second. And third, there are many companies, I would not name them, but there are companies which even our clients are using who render professional services. जैसे हमारे actuary services होते हैं actuarial valuation के लिए, वैसे there are companies which have started providing this service where you can give the list of the companies or the client can give the list of the companies with whom they have had transactions, and this service provider would give the list कि इसमें से कौन से stock off है, कौन से stock off नहीं है, and that can be used as a audit document for reporting in this. But again, I would feel, friends, one important aspect to this is that the clients should have a company identification number that should be made available. See, because आप नाम से भी VLOOKUP करेंगे तो भी आपको नहीं मिलेगा, because you know many times some people write PLT, PVT LTD, some write PVT full stop LTD full stop, some write P full stop LTD. So there are names, spelling errors. So it's better to have a common field, which is a company identification number. And hopefully going forward, this list would be available on the MCA website itself. But till now, I would suggest, but even then also, we will need a field from the client's database list is the company identification number with which the VLOOKUP can be run for this reporting. So you can ask your client to presently avail the services or whatever way it wants, but pehle company identification number list out karke iski reporting, and then you can do a test check of whatever the client reports under the schedule 3. Other disclosures, charges satisfaction yet to be registered with the ROC. So creation of charge or satisfaction of charge beyond the statutory period. So whatever is the time limit, agar us tab tak nahi file kiya hai, then that has to be disclosed. And on the number of layers prescribed under section 2 subsection 87, the Companies Act says that you can have 2 layers of companies under you. So if you are a holding company, your client is a holding company, uske niche 2 layers of companies are permitted. So in case any of your client has violated that and there are more than 2 layers of company, then those details have to be given in the schedule 3. Analytical ratio, now this has to be disclosed as part of schedule 3 as part of the financial statements. So you can see that there are 11 ratios for division 1 and division 2 entities, and there are 4 ratios in case of division 3 because typically they are with respect to the NBFCs. So what the guidance note says is that you will have a numerator, you will have a denominator when you are doing the ratios. Now numerator, there are some standard numerator and denominators which have been given in the annexure B to the guidance note on schedule 3 for each of the division 1 and the 2 and the 3. So that has been given in the annexure B, but the components of those, they might vary from industry to industry or from company to company. So what it says is that because you have to give a comparison for the ratios also, I don't see March 22 would be a challenge, but going forward, let us say the client has taken a particular numerator and denominator for March 22, March 23, March 24, and now into March 25, they feel that based on the industry practice or based on the business that the client carries on, there has to be some tweaking, some changes that has to be done with respect to the numerator or the denominator. In such a case, when you are giving the March 25 numbers for the ratio, the same numerator denominator you will have to consider for March 24 as the comparable. So now we will not say कि भाई March 24 हमने last year already certify कर दिया है, ये ratios है, but now March 25 I will change the ratio, I'll keep 24 same as what was certified earlier. No, because then that comparability is lost when you talk of the ratio, and therefore the guidance note says that for the current year and the corresponding previous year you will have to follow the same numerator, denominator and the same ratios. and company specific, sector specific changes might be required for the, or modification might be required in the ratios. So this is a suggested format in which the ratios can be given, the numerator, the denominator, current period का क्या ratio है, previous period का क्या ratio है, percentage variance, and 25% से ज़्यादा अगर variance है तो उसका reason देने का. So friends, 25% might seem a very big number, but if I talk, let us say something like a debt equity ratio, you know, that from 1.25, it has become 1%. So there is a change of 25%, and that needs to be reported. Yeah, 1.3 का 1 हो गया है. So that is a change of more than 25%. So उसका reasons for the change will have to be reported. Scheme of arrangements, accounting. So typically this is with respect to AS 14, the mergers, and Ind AS 103, I would say. So the accounting has to be as per the prescribed accounting standards. There have been cases in the past where the accounting, because it now goes to the NC, earlier it used to go to the High Court. The High Court used to approve the accounting. The accounting might be in violation of the accounting standards, but because there was a High Court order, the accounting was done as such. Now it goes to NCLT, but nowadays what I've seen is the NCLT takes a certificate from the statutory auditor that the proposed accounting in the proposed scheme is not in violation of the accounting standards or is in accordance with the accounting standards. So in such cases, there would not be much of a reporting that would be required under this disclosure. But typically, this disclosure wants that where there is a merger or an amalgamation or a scheme of arrangement, restructuring, the accounting that has been done is in accordance with the applicable accounting standards. Utilization of the funds and the share premium, loans, advances invested. So there is too much of text. I will just explain to you in principle, because this reporting is also required in the main audit report under Rule 11E. And so I would suggest that just a couple of weeks back, the Auditing and Assurance Standard Board has come out with an implementation guide on Rule 11E and F. Friends, that is a change to the main audit report, and you must address it before you are certifying. So Karo may be change hai, or main audit report may be change hai, so please ensure that you don't miss out on that. Yeah, so what it says is that, let us say your client is company A. Now company A wants to give a loan or an advance or a guarantee or wants to invest in an entity F. Now it does not directly do with entity F. What it does is A gives to B and B in turn gives to F. So ultimate beneficiary is F and B is an intermediary. So this reporting ऐसा कुछ transaction है, or reverse में भी है, that company A is receiving, somebody has given a guarantee on behalf of A, which is your client, or it has received loan, or it has received investment in its securities. In such a case, where the ultimate beneficiary कौन है, तो whether it is through a roundabout route, a pass-through entity, या direct है. अगर pass-through entity है, so it may be a foreign transaction, it might be a domestic transaction. अगर ऐसे कोई भी transaction है, either investing out from your client or investing in to your client, these are the disclosures which are required to be made under Schedule 3. And you can see it also requires whether the provisions of FEMA and PMLA, Prevention of Money Laundering Act, have been complied with or not. So these are all the disclosures which are required if there are any such roundabout transactions that have been entered. So that was with respect to the balance sheet. On the statement of profit and loss, on the face, there is a change. Total revenue, the word revenue has to be changed to income. And second change is with respect to the revenue from operations. There is a line added BA, which is for grants or donations received. So this is relevant in case of Section 8 companies. So Section 8 companies, you are all aware, these are the non-for-profit companies which are being set up, and more companies are being set up, especially with the CSR regulations. And so there was no line item under the revenue from operations because their revenue is neither from sale of goods nor sale of services, and therefore there is a new line item that is added for them. Undisclosed income. So this has to be disclosed now in the financial statements. But what is undisclosed income? It is very important to identify that. So what it says is that any transaction which is not recorded in the books of account, which has been surrendered or disclosed as income. So important is that your client should have voluntarily surrendered or disclosed that income during the year under the tax assessments, right? If there is a voluntary surrender or disclosure, then the company will make disclosures whether it was previously unrecorded income and the related assets have been now properly recorded, how they have been recorded. So, but important is a voluntary disclosure. So, typically additions that are made, capital, revenue, personal expenses being disallowed on a ad hoc gross profit margin. So these are not amounts or the incomes which are surrendered or disclosed, and that should not be should not form part of this particular requirement of Schedule 3. Even if a statement has been made which has subsequently been retracted, pursuant to a survey or a search, then that cannot be treated as surrendered or disclosed because that statement has been retracted. If a disclosure has been made to buy peace, because the client does not want to go into further litigation or any such thing, and they have said that fine, please add this amount. In that case also, it should not form part of this disclosure, provided, again, I would say that in that submission, it is clearly being brought out that this addition, the client is agreeing to buy peace. I think that should be very clearly demonstrated in the submission that is being made. If not, then that would become a voluntary disclosure or surrender, and the necessary compliances under this has to be done. Corporate social responsibility. So where the company is covered under 135, then we already have the ICA guidance note, which gives the details of the disclosures to be made. In addition to that, these are some disclosures which are there, and further disclosures are there in CARO 2020 also. Cryptocurrency, virtual currency. So these are the disclosures with respect to that. So we feel that this was introduced in the budget of this year, but I would say no, because this amendment of Schedule 3 was already there in 2021. It was just postponed because of the COVID situation. So the transactions of profit and loss, the amount of currency held on reported date, whether कोई deposits या कुछ दिया है trading investing के लिए, all those disclosures with respect to cryptocurrency or virtual currency has to be made in respect of the so whatever in the financial year, these shall be disclosed. So that was the changes, the discussion with respect to the important the changes that have been made in the Schedule 3. Now, before I move on to the next section, I think I'll take up the questions because they would be important because there are the new changes that are there. So let me just go through the chat box. Whether trade receivables to the extent of security deposit, if any, received from debtors are to be considered as secured. So I believe that security deposit from a trade receivables, if it is in the nature of security deposit, it would not be classified as a trade receivable. It would be shown as a security deposit and would not form part of the trade receivable at all. And therefore, in such a case, if it is a security deposit where we said that it would be under the loans and advance other current assets, there is no requirement to show it whether it is secured or unsecured, right? So that would be one thing. I hope I've got the question right. Else, I would request the member can unmute and just share in case there is any other understanding as far as the question is concerned.
Sir, I think the question wants to be asked is there is a security deposit, let us say of 50 lakhs, and corresponding to that there is also a trade receivables of 50 lakhs. So in that case, what to get?
So see, I would okay. So you saying that there is a deposit which is received, which is there in the liability, and there is an invoice that has been raised, which there is a trade receivable, right? Yeah, Abhijit. Is that it?
Yes, I think so. Daga sir, is it right?
Yes, yes.
Fine. Thank you, sir.
Yes.
So
Take the example of utility companies which receive security deposit from customers and raise this bill on day-to-day basis. Whether
Yeah.
to the extent of security deposit, receivable can be treated as secured or not.
Yeah. So see, if the security deposit, there can be two types of the security deposit. So you are having that on the liability side. To that extent, in my view, it would be termed as secured because the contractual terms, they allow that deposit to be adjusted against the non-payment of the trade receivables, and therefore that to that extent they would be classified as secure. Right. So that is with respect to that. The second question that we have is on the borrowings. Sorry, I missed one question. This disclosure of trade payables and trade receivables is in addition to or in replacement of earlier disclosure requirements. Friends, all these are in addition, all additional disclosure requirements. Borrowing on security deposit, quarterly statement reco under Caro limit of borrowings is 5 crores. Any such limit in Schedule 3? No, friends, there is no such limit in Schedule 3. Rightly mentioned by Om Prakash ji that in Caro there is a threshold of 5 crores. But again, that 5 crores, friends, is on the sanction amount of 5 crores that this reporting gets triggered in Caro. But as far as Schedule 3 is concerned, there is no such threshold that is there. Rohit ji has asked, borrowing against security, only quarterly returns are to be taken into consideration, or monthly stock statement should also be taken into consideration, which generally don't match with balance as on year-end financials. So the requirement is very clear. It is quarterly returns or statements that are filed. So monthly, even the guidance note says that if it is on a monthly basis, the other months can be ignored. It would just be on a quarterly basis. And if they do not match, then that is where the reporting would come, the quarterly numbers or even the year-end numbers that would not match. So since they are not matching, that disclosure would come. Can you please repeat the point of undisclosed income? Fine. So for undisclosed income, friends, so undisclosed income, I'll just highlight because I have discussed in depth. So one is that income should have been surrendered or disclosed voluntarily by the client. That is one. Second is ad hoc additions and made in the course of assessment proceedings would not mean there is an undisclosed income surrendered or disclosed. Third is that if there are any search survey done and any statement that has been given, that would tantamount to an undisclosed income if not retracted. If that statement on the next day or subsequently is retracted by the client, then that would not be a surrendered income by the company and therefore would not be required to be disclosed in this particular point. And fourth, what I mentioned is that if the client has given in the submission that they are agreeing to that addition or whatever it is to buy peace of mind, or to ensure that there are no disruptions to the business or whatever, in such case, that would not be a surrender or a disclose, but provided it is clearly mentioned in the submission. Yeah, Aditya ji, you have some question. You have raised your hand.
So in case of an asset that is building, which has been classified as a property, plant and equipment, and against which the rental income is generated, which is shown as in business income, and not income from other sources like other income. What I mean to say is it is a forming part of the turnover from operations. So whether that disclosure regarding investment property applies to this.
So you are talking about a division 1?
Division 2, sir, Ind AS.
So Ind AS, yes. So if the property, so you will have to see the Ind AS, the standard is very clear on investment property that where the purpose of holding that property is for gains or for rentals, right? In that case, it would be classified as immobile property. But my view is that in such cases, the rentals is the business of the company.
Correct.
Right. So irrespective of whatever you are doing a classification under the Income Tax Act or in the computation, if the main objects of the company says that the name, the business of the entity is to earn rentals, and see what would happen is, see, it's not, if I talk of a mall, you know, it's not that they are earning rentals. They are providing security services, they are providing maintenance services for which they are getting rentals. So rentals is it's a composite amount, and not just leasing away and doing nothing with respect to that property. In such case, in my view, it would not be classified as a investment property. But if it is just an office space that has been leased out with no other commitments or no other obligations, then that would be classified as immobile property.
So taking that question ahead, I agree with this, your view, what you have expressed. Only taking the view ahead that in case, suppose I am having an investment property, whether it needs to be depreciated based on an cost model which has been referred in the PP index. That PP index refers that the investment property needs to be disclosed based on a cost model. And if you go to the cost model says that the depreciation needs to be taken on an investment property as well. So whether the concept is right that depreciation need to be taken on an investment property also.
Yes. So see, if we talk of investment property, so you are saying that it has been classified as investment property.
Yeah.
And you want to charge depreciation on that.
Correct.
Yeah, I think so. It is allowed under the cost. You have the useful life because you have rented it out, and in such cases there would be a depreciation element to it.
Okay, thank you.
Right, but Ind AS also requires that in case of investment properties, you have to disclose, if you are following the cost model, you have to disclose the fair value, fair market value, as at the balance sheet date as an additional disclosure. So that you will have to comply with.
Okay, thank you.
Yeah. There was one more question. Om Prakash ji, building built on leasehold land, say MIDC, lease deed executed, how to disclose lease deed, how to disclose. So see, leasehold land, lease deed, if it is executed, then there is no need to disclose because the title by way of the lease deed, it is already in the name of the company. If lease deed is pending, then it will have to be disclosed. So you have those columns where it has been given, and important would be that you'll have to also give the reason why it is not, the lease deed has not yet been executed. So that disclosure would come in case of a lease arrangement also, because if the lease deed has not been executed. Right. So any more questions, or we can move on to some of the important aspects of the Schedule 3 जो पहले भी था. Fine.
Sir.
Yeah.
Nothing, sir. Let us go.
Yeah, done. So we have about 25 minutes. So maybe another 15-20 minutes. I'll run through these, and then we can have another 5-10 minutes for Q&A if there are anything that members want to ask. So why I'm saying quickly is because we have been following this Schedule 3 now since almost 8-10 years, and so there should not be much of an issue. So we all know that the requirements of the Act, the Companies Act, and the accounting standards that will prevail over the requirement of the Schedule 3. Unit of measurement. Friends, this is one area where I would like you to please be cautious. What happens is that the financial numbers, you follow whatever, abhi to rounding off aa gaya hai, so we need to be more cautious that you are giving in hundreds, thousands, rounding off जो भी, और क्या है वो बैलेंस शीट टैली करने के लिए वो तो नंबर सारे राउंडिंग ऑफ प्रॉपर ही होते हैं हंड्रेड्स थाउजेंड्स में, बट जो नोट्स में डिस्क्लोजर्स में आते हैं रिलेटेड पार्टी में और उसमें many times we give full figures or we give whatever we feel, because you know ultimately that is not linked to the balance sheet, तो वहाँ पे कुछ भी आ जाता है. So my request is please ensure that it's the same unit of measurement, the same rounding off that you are using across the financial statements. The line items, subline items, subtotals, you know, you can add them, you can substitute them on the face. So there is no such restrictions with respect to that. शेड्यूल 3 में जो भी टर्म्स यूज किए हैं वो अकाउंटिंग स्टैंडर्ड्स, इफ इट टॉक्स अबाउट रिलेटेड पार्टीज, देन यू हैव टू गो टू AS 18 and find out what is the definition of related parties. So that is there. Current, non-current, we all know, and the comparatives for the previous year should be prepared on the same guidelines as in the current year. So current year में जो भी है उसको previous year में we might need to do a sort of not a restatement but a reclassification if required based on the current year numbers. So current year में जो सही है उसी के basis में previous year आपको reclassify करना है. Operating cycle. This is an area where I believe हम लोग standardize काफी करते हैं, but there can be deviations also. So right, so what is an operating cycle? मैं asset purchase करता हूँ, inventory में purchase करता हूँ, right? So that is where my trigger starts for a operating cycle. Then I have the manufacturing, मैं उसका पूरा process करता हूँ, मेरे let us I have a distribution network, तो मैं सारे मेरे C&F location stockists को पहुँचाता हूँ, वहाँ से sale होता है, sale होने के बाद या फैक्ट्री से सेल होता है, there is a 30 days or a 60-day credit period cycle, and then that gets converted into cash. So from the time of procurement till it gets converted to cash, ये पूरा जो cycle है, that is known as the operating cycle. So it can be more than 12 months also. See, especially in case of real estate companies, what happens is that अगर मैं एक building बना रहा हूँ, client कोई building बना रहा है, let us it is a 10-story building, then definitely it cannot be in 12 months that he would be able to complete it. So the operating cycle in case of such projects can be of a 2-year or a 3-year also, because what we are saying, material आता है, माल बिकता है, उसका cash and cash equivalent. So the whole cycle, it would take maybe 2 years in case of a real estate. So that is what we need to keep in mind, especially when we are talking of the companies where there are long gestation period cycles which are there. Agar operating cycle we are not able to identify multiple products hai, so it, the standard the schedule 3 and Ind AS also now it says that 12 months is the standard that you can consider. Multiple businesses hai, it can be different. Now let us say a listed company, right? It is into you go through the segment information, it goes through real estate, it has a trading activity also, FMCG hai, uska hotels, let us say somebody like ITC, which is into hotels, it is into cigarettes, it is into FMCG, it is into paper. So there are different businesses which are there, and each different business can have a different operating cycle. So in such cases, you will have to consider whatever is the operating cycle that is applicable for each of the business, and accordingly you will have to do the classification of current, non-current. So some aspects on the current, non-current, inventories, non-moving ho, slow moving ho, but it would be consumed or realized within the normal operating cycle. So inventories would always be classified as current. So अगर non-moving, slow moving भी है तो उसको भी current ही classification आपको करना है, because ultimately when you are buying them, they are expected to be realized within the 12 months, and therefore you will have to classify them always as current. Second is more on the borrowings, that any liability to which the company does not have an unconditional right to defer its settlement for at least 12 months after the balance sheet will have to be classified as current. Now let us say a client has taken a loan where whatever are the loan covenants, वो कुछ breach किया है तो उसके basis पे it becomes a payable on demand, right? So now there are two things. One is let us say stock statement देना है, या typically if we talk about term loan कि उसका insurance देना है, you know, we have to submit to the bank and नहीं दिया है. So all these things in India typically we have seen that उसके लिए वो amount call नहीं कर लेते, मतलब bank does not say कि आपने ये insurance का policy नहीं दिया है vehicle loan में तो आप immediately पैसा वापस कर दो. In such case you can, it would still current as a non-current classification, whatever. But if there is any such breach which is significant, by which we feel that the bank would recall the money, as per the agreement it becomes payable on demand, and till the date of signing of the financial statements the bank has not yet recalled that money, then you can still take a view that it is non-current. But for such cases where there is no unconditional right to defer beyond 12 months and आपको लगता है कि बैंक है या lending है because of the breach, it would call the money, or it has already called the money, and your client is into negotiations with them. In such cases, you will have to classify it as current, because the client has no unconditional right to defer it, or it has no right of its own just to say that I'll defer it by 12 months. As far as employee benefit obligations are concerned, we have to see very clearly whether it is current or non-current, especially leave encashment, gratuity provisions jo hai. In case you are getting the actuarial valuation done, please ask the actuary to give you the bifurcation between current and non-current, because we are not competent in case of actuarial valuation to find out whether anything is current or non-current. Bonus वगैरह है, that would always be current, but leave gratuity can come in both the categories of current and non-current. In case of share capital, these are the disclosures that should be made separately for both equity shares as well as preference shares. Okay? सबके लिए तो holding company कितना है, ultimate holding company. So normally, we give holding company, subsidiaries, associates, but ultimate holding company many times gets missed out in the disclosure in the reporting. So you have the holding company, ultimate holding company, subsidiaries of the holding company, fellow subsidiaries of the holding company, typically subsidiaries of the ultimate holding company, uski bhi kuch subsidiaries hai, so that needs to get disclosed, associates of the holding company and associates of the ultimate holding company. So these are the disclosures under share capital. Share application money. So this is something which many times is in private companies we've seen gets resorted to avoid the acceptance of deposit provisions. But now the rules, the provisions of the Act are very, very clear. So first of all is the disclosure that share application money has to be disclosed on the face of the balance sheet between the shareholders' funds and the non-current liabilities. It has to come under the face. Second is with respect to the issued capital. So capital, jo hai, we would have the authorized, right? Authorized, then we have the issued, we have the subscribed, and we have the paid up. So share capital money, which is within the issued capital. So see, typically as a process, what happens is you have the authorized capital, then the board of directors, it decides that हम लोग इतना issue लाएंगे. Let us say 50,000 shares का issue लाएंगे, 1 lakh shares का issue लाएंगे. So that is the issue. Then you have people who would be subscribing to it and if at the balance sheet date that subscription money has been received but shares not allotted. So typically you should have different. So there should be a authorized capital, then there should be an issued capital, then there should be a subscribed capital, and then if it is partly paid up, there should be a paid up capital. So it is not necessary that issued, subscribed, paid up hamesha same hi ho. You have to examine and see if there is any change, then you will have to make those necessary changes. So issued, so what comes under share application money? So share application money that is within the issued capital, and if it is not refundable, मतलब उसके सामने shares issue होने वाले हैं, then that would be disclosed as a share application money. Otherwise, it would go to other current liabilities, because company will have to pay that back for 2 reasons. It is beyond the issued capital, or it is refundable, and therefore that amount will go above into the other current liabilities. There are various disclosure requirements. Now share application money, as per the provisions, now have to be refunded within 60 days. Right, so sorry, they have to be allotted within 60 days. Shares have to be allotted within 60 days. Without, otherwise the share application money will be refunded within 15 days. So within 15 days from 60 days. Failing which, interest at the 12% per annum from the expiry of the 60 days they have to give, or 76 days, 60 plus 15, 75 days tak refund nahi hua hai, then it would come under the acceptance of deposit rules ke violation mein, and it has to be disclosed in the auditor's report also as such. Adjustment of the amount for any other purpose shall not be treated as a refund, right? So let us say that there is some balance, debit balance that is receivable from that party. Abhi usse share application money aaya hai, I have not allotted shares, I have not refunded, but I knock off against that receivable, then that adjustment would not be in agreement with the provisions of the law. It would still be in violation, and it will not be treated as a refund. Borrowings. So I'll just take a couple of important things on the borrowings part that with respect to disclosure. One thing is that prepayments बहुत बार होता है, you know, especially with respect to EMIs, the company prepays, and then I have seen that जो balance period है, because that is a reporting requirement with respect to the maturity, as at the balance sheet date कितने installments बाकी है, and the applicable rate of interest and everything. In such a situation, I still feel, my personal view is that though prepayments have been made, whatever are the installments that are remaining as at the balance sheet date, as per the original terms, that should be disclosed. The logic that I'm saying is, let us say there are 3 prepayments that have been done till March 22. Now, balance period as per the original agreement was, let us say, 24 months. अभी भी है. So if I say 3 prepayment हो गए हैं, so that means 24 से मैं 21 कर दूं. That can be one school of thought. My view is that वो 24 जो है 3 prepay किए, the company, the borrower has the option to skip 3 installments, and then also it would not be in violation of the borrowing or the loan covenants, and therefore 24 installments जो as per original terms है उसको disclose करना is what I feel is more suitable. So we cannot give all term loans from banks, and as a blanket disclosures should be avoided. You have to give a bank wise whatever are the securities, unless there is one security given for multiple loans. Like you can say that for all the term loans, the security is land that has been given. Then it is fine because there is just one security for all the loans. But if the you cannot say that all the term loans from banks are secured against land, building, immovable properties or other immovable properties or security of director. If bank wise it is different, then you have to give it differently. Provision versus liability, friends, this is a very favorite observation of mine, that provision for audit fees we put as a provision, right? Provision for purchases we put it as a provision. Provision for bonus we put it as a provision. Please understand there is a difference between provision and a liability, right? A provision is where a high degree of estimate is required, whereas a liability is something where it is accrual. There is estimation, but not to the extent of provisions. Where there is a provision, then you have to give all the movements, like what was the opening provision, how much has been utilized during the period, how much has been reversed, what is the additional provision, what are the closing provisions. All these disclosures has to be given for other than SMC. So typically, if we look, we have to distinguish between a liability and a provision. So this is just an example that audit fees is a current liability. It is not a provision, though the ledger name would contain the word provision, but technically, as per the accounting standard, it is not provision. As per Schedule 3, it is not a provision. Provision for expenses, year-end ka kuch bhi hai, it is a current liability, it is not a provision. Warranty related, because a high degree of estimation is required that what would be my future warranty related costs. So the current liability. Leave gratuity is again a provision with current non-current classification. Doubtful debts is neither a provision nor a liability. It is adjustment against the date receivable. And income tax also, though we use provision for income tax, but it is a current liability, because once whatever is the amount in excess of the advance tax TDS that is payable would have to be discharged immediately. So these are with respect to provision versus liability. Non-current investments, these are some important aspects. So we have to classify between trade and other investments, further classified between investment property, investment in equity instruments, investment in preference shares. All that is given in Schedule 3. I would just like to highlight here one important aspect, that when it comes to the partnership forms, we have to make a disclosure of the forms with the name of all the partners, total capital and shares of each of the partners. So this is something which I find missing when it comes to investment in partnership forms by the companies. This is the additional disclosure requirement that is there. Long-term loans and advances. So here the important aspect is with respect to capital advances. मतलब fixed assets purchase करने के लिए कुछ advance दिया है. So that would be, so many times, you know, the mindset is कि ये advance जो है 12 महीने में, let us say for purchase of car, I'll make it very simple. Purchase of car advance has been given of 5 lakh rupees as of 31st of March. Then normally the thought process is the car would be delivered in April. So it would get converted into a fixed asset within 12 months from the balance sheet date, and therefore it should be classified as current. No, that is not technically right. Capital advances for procurement of property, plant, equipment, it has to be shown under long term, because what would happen is that when that advance would get adjusted, what you will receive against that is a long term asset, a property, plant, equipment. So that long term loans and advances would get classified into a property, plant, equipment, and that is how it should be reflected as a long term. And if you have advances, prepaid expenses, so prepaid expenses, kabhi clients kya ek saath 5 saal ka de dete hain payment. So whatever is the prepaid that would be reversed in the next 12 months would be current, and the balance 4 years of that after 12 months, whatever is the prepaid that would be reversed would be your non-current or a long term. Similarly, advance tax, service tax, GST, all those which are not expected to be realized within the next 12 months. Income tax assessments kuch chal rahe hain. So to that extent, if it is under tribunal, high court, commissioner of police, and you don't expect it to be realized in the next 12 months, you'll have to classify that as long term. Inventories. So goods in transit has to be reflected under the relevant head. So if there is a raw material goods in transit, then it will come under raw material goods in raw material goods in transit. Agar if it is a finished goods, trading related kuch hai goods in transit, then it will be a finished goods trade in transit, a separate line item. So under relevant heads, raw material ke saath uska goods in transit, finished goods ke saath uska goods in transit, sports and spares कुछ परचेज कर लिया है बट हमारे फैक्ट्री में नहीं आया, रिस्क एंड रिवॉर्ड हैज ट्रांसफर्ड, सो दैट वुड कम एज अ गुड इन ट्रांजिट अकॉर्डिंगली, एंड so that is how the goods in transit have to be disclosed. The mode of valuation for each class of inventories should be disclosed. So when we are writing the significant accounting policies, even the mode of valuation schedule 3 we have to write under the note. We cannot say that for all the items of inventory it is so cost or net realizable value, whichever is lower, you can say yes, it can be for a single cross because it is the principal. But mode of valuation, whether it is first in first out, weighted average, that you have to give inventory wise. So stores and spares का क्या है, आपका packing material का क्या है, raw material का क्या है, goods in transit का क्या है, finished goods का क्या है. So for each class of inventory, you have to disclose the mode of valuation. And finished goods should comprise of all finished goods other than those acquired for trading purpose, because trading purpose का जो है that would come under the category stock in trade, right? तो हम लोग जो purchase करते हैं just to sell them off, that would come under the trading categories, and that would not come under finished goods, though that would be finished goods. For all purposes, it would be finished goods, but it is not those which are manufactured, but they are purely for trading, and therefore they would come as stock in trade. Friends, with that, we come to the end of this session on Schedule 3. I hope you would all have enjoyed the session. I thank you for a very patient listening. And in case there are more questions, I would be happy to respond to them. Thank you. Thank you very much, friends.
If any questions, please raise your hand, or you can directly unmute yourself and ask the questions.
Friends, just one thing I would like to add, that since a year, I have started sharing small snippets on various technical aspects. I do a broadcast on WhatsApp. So I would just request, if you are interested in getting that, many of you are aware and you have already added that. I will just give a mobile number. I'll mention in the chat also. You can save that number and just drop a hi so that I can add you to the broadcast list and you can get the technical snippets as and when I release them. 8511831981. So in case you are interested, you can just drop in a hi to be added to the broadcast group. क्योंकि broadcast में क्या है, आप number save करेंगे तो ही आपको मिलेगा. Yeah, back to you.
I hope there are no questions. If any questions, yes. Any questions? Fine. Yes.
Milinji has a question. Yeah, Milinji.
Yes.
So it's regarding the partnership firm. You mentioned that the shares of all other partners also to be mentioned. So can you just elaborate what exactly has to be mentioned? That is one, and secondly, whether it is a prescribed requirement or it is by way of an additional disclosure.
So, see, as far as the partnership firms are concerned, what the Schedule 3 requirement mentions is that you have to give the names of the firm with the names of all their partners, total capital, and the shares of each partner. So let us say the company has invested. So this is for companies. The company has invested in a partnership firm where it is having 40% share of profit, and for 10% each, there are 6 other partners. So the disclosure would require, so the name of the company, that name of the LLP or the partnership firm, that ABC partnership firm, then you have to give is the list that so A company private limited 60%, then Mr. A 10%, Mr. B 10%. In that way, a full list of partners, their shares, and also the capital of each of the partner as at the year end.
Okay. Thank you.
So that was the first. You had one more question, Milinji, you had asked.
No, yeah, you answered that this is legally required. I mean, it is not by way of an additional voluntary disclosure. It is prescribed in Schedule 3. Yeah.
Yes.
Okay.
Yes.
Yeah. Okay. Thank you.
Yes, Aditya ji.
Has the next question.
Sir,
Yeah.
with respect to the loan utilization point, many a times it happens that the loan which is taken by the businessman, they mix it with their common funds in say some current account, and therefrom it is not possible to link whether the loan which was taken for a particular purpose, whether it has been utilized for it. It is after it is put in the common hotspot, from there it becomes very difficult. So how to report on in such cases? And
So, yeah.
I mean, what to my understanding, what we can do is probably is that if 10 crore has been drawn, we can check is whether that person has utilized 10 crore for whether there is an addition of 10 crore in fixed asset.
Yeah, so I agree. So see, there can be two possibilities. One, like I said, that when it is a term loan, what you mentioned, that it becomes very simple. Simple in the sense that you are able to identify with the gross block of assets, whatever is the investments made since that loan has been sanctioned. So, typically you have a loan which you put into your current account, and then from there you are having a normal business transactions as well as the tax related. So, on the fixed assets group or ledger, you can identify what is the amount that has been utilized. When it comes to those loans which are given for the business purposes, it's a general thing that it will be used for business purpose. In that case, what I believe is that you will have to prepare a cash flow statement or a fund flow statement and ensure that whatever are the movements, they are all with respect to. So what I mean to say is it should not happen that there is an increase in loan on the liability side with respect to the borrowing, and on the asset side, you find that there is some investment in a share or some advance given to a related party or such transactions which you typically would say are not in the nature of a business transaction or for the purposes for which the money was borrowed. And we'll have to identify from this way as far as if it becomes a total pool or the borrowed money is put into a pool and then utilized.
Okay.
Right? Yeah, Rohit ji.
Yes, sir. Sir, in case of Ind AS compliant companies, where bifurcation of employee benefits has been done on the basis of the actuary valuation, like leave encashment, gratuity, and others. However, some part has not been taken into consideration by the actuaries, for any reason, like sick leaves, they don't take into consideration for calculation of leave encashment. However, company still pays for the sick leaves. How to classify that nature of expenses, whether it will be current or non-current?
So see, sick leave, then if you ask me, so I see typically it would be that we'll have to go through the policy, but sick leave you have to see that whether it can be accumulated beyond a year, because many of our clients where we have seen कि sick leave दिया है मार्च तक यूटिलाइज नहीं किया है तो वो लैप्स हो जाता है, एंड तो लैप्स हो गया तो उसका वैल्यूएशन ही नहीं होगा.
No, it accumulates into the account, and If that employee leaves, then he will able to get it. He can encash
Yeah,
it.
so see, that again has to be seen, that carry forward agar hai, so again carry forward is because see, sick leave normally if it gets added to the privilege leave, the PL and all that we say, and then the valuation has to be done by the actuary, because if it is not payable in the next 12 months or it does not lapse within 12 months from the balance sheet date, and the company cannot of its own, because see 2 साल में 3 साल में 4 साल में कौन कब retire होगा, कितना in cash होगा, see all those are the actual assumptions which the actuary has to do. We are not competent for that, and in my view, if they are making, so instead of an actuarial basis, they are making provision on actual basis.
Yes.
Right, based on the number of days and estimation and all. You will have to then, I would say, at least then draw an emphasis of matter paragraph. And if it is a material misstatement, because you don't know what the present value and all those things would happen and what the actual leave would be there, sick leave provision. I believe you should insist on the actuarial valuation for the actuary. It would come as a separate actuarial valuation. Otherwise, you have to see that whether as per the scheme, there is a violation of the provisions of the Ind AS 19 or AS 15. And if yes, then you will have to qualify or modify your audit report or your opinion.
Okay. Okay.
Yeah, I think there was one question in the chat box. Where to show in Schedule 3 the amount invested by the company in liquid mutual fund. So liquid mutual fund, I have seen it would come under investments. Current investments, because they are liquid mutual funds and definitely with the intention to sell and not to hold beyond 12 months. And I've also seen companies considering them as part of the cash and cash equivalents when it comes to the cash flow statement. So what happens, we normally take cash in bank, but because these are liquid mutual funds, which means that you can get it immediately in 1 day or 2 days, the money. And therefore, I've seen many companies putting that as when it comes to the cash flow, in your opening and closing cash balance and the reconciliation, it takes the liquid mutual funds as part of the cash and cash equivalents for cash flow purposes. But on Schedule 3, it will go as your investments under current investment.
Sir, one more query regarding the cash flow statement. Whether the cash flow statement need to be shown, is to be prepared based on a direct method or an indirect method. Whether there is some restriction on.
No, there are no restrictions. It's just that you have to mention in the policies that which method you are following. Normally, I've seen companies following the indirect method.
Because that is
listed companies or sub indirectly follow karte, but you have to make a disclosure which method you are following. So some give as part of their accounting policies itself on what is the method and all used. And I've seen a few cases where they give below the cash flow that the company has used the indirect method as we provided it.
For Ind AS also there is no such.
No.
Okay.
Chat box में एक है, maybe this can be the last question. So whether consolidation needs to be done if company is more than 51% partner in firm. So I know this is not a Schedule 3 question, but still I'll try to attempt an answer to it. That in case it is a partnership firm, then 51%. So consolidation is required where it is a associate, joint venture, subsidiary, associate or joint venture. And I believe subsidiary के definition में partnership firm नहीं आता है, and therefore consolidation is not required. I'll have to check in detail, but this is what my immediate reaction would be. Yeah, back to you, Abhijit.
Yes, sir. I hope all the queries are answered, and I think sir is always available for us if we have any specific issues. Sir, before concluding the session, it was really privileged to
release नहीं वो बोले सिग्नल आती नहीं बोले कभी भी.
It was really privileged to have you and here on such an important topic of all the revisions which are there in Schedule 3. You have surely opened our eyes, and now it is very clear that audit is a very serious business and one cannot take it that lightly. Thank you for answering all our queries, sir. we will surely at Nasik branch of creating a panel and also arranging a meet for the clients so that the compliance become easy. I once again thank you, sir, for enlightening us on this very important topic. Thank you. Thank you all the participants, and see you tomorrow for the second session, which is on Caro and all the changes related to that. Thank you once again.
Yeah, just a minute to everybody.
Yes, sir. Yes, sir.
Thanks from my side. But see, I have just saw Om Prakash ji has mentioned to share the PPT. I will share, but what I will do, I have a PPT where it covers only the recent amendments in Schedule 3 and Caro 2020. So since Caro 2020 was not part of the discussion today, I added with respect to Schedule 3, which I think so. See, those additional slides, important on other important aspects of Schedule 3, you can always get in the guidance. So I will share this PDF with Abhijit, who can in share turn with everybody. So it gives even on Caro 2020 tabular comparison of what the earlier requirement was and what the current requirement was, and also on the Schedule 3 amendment. So it would be typically the recent amendments of Schedule 3 and Caro 2020.
Yes,
right?
sir.
Thanks.
Yes, sir.
Thanks.
Thank you very much.
Have a great evening.
Thank you, sir. Thanks a lot.